Ladies and gentlemen, welcome. This is Christopher Aaron. This is a special podcast that we're doing. I have an interview that I would like to present with you. The individual's name is Francis Hunt, and he goes by the name The Market Sniper online. And this is someone whose work that I have a lot of respect for. He is a technical-based analyst, a technical trader, similar to myself. And it's always good to have individuals who you can associate with and speak with, who see things from a slightly different perspective. Yet at the same time, I would say the common thing, and the reason why I wanted to have Francis Hunt on the show, is because he understands the fundamentals behind the markets, yet he also understands that markets can move sometimes in contrary directions to what those perceived fundamentals might be dictating. So I'd like to welcome Francis, and thank you for being on the show.
Hey, delighted to be back, Chris. Very, very happy.
So I wanted to start off, we have a number of topics that we're going to cover today. If I could, Francis, I wanted to start with your perspective from a technical basis on the U.S. stock market. And we're going to pull up some of these charts. Francis will be pulling up some of these charts for us. I wanted to ask, as far as U.S. stocks, we've looked at a lot of fundamentals. We can look at dividend yields going back 150 years. We're at near all-time low dividend yields. We can look at the amount of margin debt that is being borrowed by investors to purchase stocks, which would lead us to believe that stocks are overvalued, seeing as how we're at the second highest margin debt of all time at this point. Yet, when I look at the U.S. stock market, from my perspective, I don't see signs of a top yet. And I wanted to put it to you, Francis, because you look at this market in a different way from me. Do you see any signs of a top in U.S. stocks? And if not, what would you need to see in order for that to start to manifest?
Very good question. I mean, where's the stops or where's the top, as you say, for the SPX, the SPY, or the NASDAQs for that matter, on the US indices? And I pulled up the SPX in the meantime. They're very, very close to the previous point from which they were rejected very, very strongly. I don't know if you recall, we put out something in July last year saying that October is going to be a pivotal period. I'm going to just take this off the weekly and put it on a daily instead for you, and recognize a little bit more of the more recent history. And it's 33 months, which is the typical average from when an interest rate tightening cycle starts, and that you end up eventually getting a really, really first bite of a recession. And the first interest rate was December 15, I assess it was, if I remember correctly, and 33 months took us to October of 18 that we were in. And it's a really, really pertinent period, because we've said at the time there's going to be probably some contraction of some sorts, as is typically the case. Now, you might recall the Fed was still the only place in the world during that time that was still to tighten. Powell was saying we were a long way from neutral rates, etc. And going into October, that was his position. And the stock market had made new highs, taking out the previous high. So if I just have a bit of fun with the crayons a little bit with you, Chris, and we refer to the screen, we were coming up to this point over here. Now, that point was mid-end September, and then we got our final touch in October, literally to the point of the high. From that point, the stock market did a very nasty downturn, and that's what I'm highlighting here. Also, during that period, we were already in what was considered a squeeze up. When you squeeze up, you have the likes of what I've just drawn there, kind of a rising wedge. I might just make that line a little thinner.
One of my favorite patterns, by the way, to find those wedges, both on the way up and the way down.
Absolutely. Falling and rising wedges are very indicative of something, because what in essence they're doing is they're giving you a volatility constriction. So one of the key aspects about our methodology is we focus on volatility constrictions. Because when you get a volatility constriction, it's kind of like that spring being compressed, Chris. And then what that then means is the resulting move has a lot of momentum, whether it's up or down. And we, in effect, if I just wipe the face again, there a little bit and tidy up a small amount, and I'll close that. And I'm going to lose the left shoulder there of what was actually in the end what we call an HVF shoulder for a little bit, and just focus on that top a little bit. Whoops, I'm adding lines. I need to go into point mode, and we have a look at this a little closer. You actually got a small double top. Many didn't notice this, but because we were on the red alert for some element of weakness, there you are in your sort of second half September, and there's your October 3rd, and you had this M that ended up being created. And this was still in a very low volatility environment, but we were in this macro squeeze, and we'd been squeezing up. So there's that wedge again. So that was a really good opportunity for shorts. The big question came once it clearly started falling, that was, the good call and the right place to be on is it the big one? Or is it a short that blows off some of the froth and then we snap back and go back to rallying?
Right.
Which it turned out the latter. It didn't turn out being the big one that we were hoping and expecting that would take some of the froth out of it. And when I say hoping and expecting, it's not like we're negative and we want things to die, but because of the nature of the artificialness of our economic environment and the place that we're at, it's more about getting a reset to some proper sound principles. And we've had too much money chasing too many assets too high, and the multiple has got too big. And in essence, that's what's led to this. Also, we have a specific way of doing head and shoulders. We call it the HVF method way. And in actual fact, we had a perfect target meet. I don't know if you noticed in the precursor, we got a first warning of a sell-off in the beginning of 18. Said that it's likely you're going to have a tough beginning to that year. And that's when you got a first nasty sell-off. You did have a very big blow-off run-up there as well. You can see anytime you go too parabolic, uninterrupted, that's often the precursor to wanting to head for the exits. You should be concerned, instead of being drugged up on your longs and thinking this is awesome, you should be looking for exits. You got your first warning. Then you got this structure here that was a squeeze. And without going into our method too far, we take a midpoint there and you take a target from the high. And this gave us a perfect exit on the stop on the head and shoulders. And that was a very, very clean geometry. So the charts, if you know how to utilize them, can give you a great trade. However, the important thing during that period is this was the Fed's U-turn as well. I don't know if you recall this.
Oh, yeah. Powell's famous, change of pace from, hey, we're going to normalize our balance sheet to actually, no, not so much. Those $3.5 trillion that we printed after 2008, we'll just keep them on the books. Forget about all those promises to neutralize rates, right?
Exactly. They went from we're a long way from neutral rates to we're almost there to almost committing to not doing a rate rise for all of 2019.
Based on that one little decline. I mean, not little. It was a little scary for the longs, as it was happening. But that one, 15, 18% decline that we're seeing right there on the U-turn, as you've annotated, is all that it took to get the Fed to completely reverse course on a decade-long plan to extinguish these $3.5 trillion that they printed.
I love these interventions of yours. It's absolutely accurate. That was the U-turn, and it shows who they work for. You judge people by their actions, not what they say. They're not worried about the hollowing out of the Gini curve and the supreme rich getting wealthier and the middle class getting decimated. These guys worry and work for the people that didn't like this price action. And that took you, as you were pointing out, from the 2.939s to the 2.3s. That's 600 odd points. Was enough for them to wet the bed and to decide to reinflate. And the market once again got the comforting music that the Fed works for them and will keep the market strong. And actually, you got a very, very strong snapback rally. Within that, we actually had a small time frame continuation when we approached this key level of ours, and that's worth just dropping into on a shorter time frame again. And we actually said that's a nice little squeeze. Actually, they're going to go for the full-blown reinflation. You're going to pop to the upside. So if I change the time frame on that and just illustrate that, that little point was at a key level. You can see the blue line that's gone through it. That was a signal to us, nope, this is going higher, the reinflation continues. Because when it first started snapback, the Fed had done its U-turn, but the question was, could they put the genie back in the bottle once they'd caused the stampede? And this little lady was a nice little squeeze for us that suggested yes, indeed. And since then, we've squeezed higher again. But bear in mind that once again, you are getting wedge-like structure as we're approaching the previous high. I've put that blue line in, which highlighted the September-October top out, the 33-month point, which saw us call for a market correction potentially and recession fears. In fact, it's my opinion we probably are already in globalized a major slowdown, potential recession. I state that comment in the terms of, in my macro personal opinion, we've been in a depression and we never got out of it. Just a whole bunch of money got printed, and the West's global prosperity is in a state of decline at the moment. In other words, there's a fascinating story. Many people, particularly gold and silver watchers, are asking, like, the one thing we don't get is where's the inflation with all this money that's been created.
Right.
And in fact, I think largely I have, to a degree, an answer for that, which we can discuss later. But while we're on the technicals here, you can see that has been squeezing up, and you're coming to the previous high. And we've just had, I'm not literally calling, you lose money by calling tops too often on the US indices, but you've just had a blow off out of the top. And I like to see that. It's kind of like an exhaustive move up. Especially when you're coming so close. Now, we could run this and then we could go into a melt up just because it's the asset class that all the money from the globe is flushing into potentially. There's a narrative that fits that as well. But that little blow off into it, and then if you get a nasty little reversal, that could set up the move to the downside, which wouldn't be that dissimilar from the previous high up top here. In structure. So actually all possibilities remain open.
Yep.
But
not time to call the top yet, but there's certainly the potential for that from the technical basis.
Correct. So I would watch this on low time frames for what little squeezes and a pullback into the range, and then grinding along this lower level, and then the first dip through that, you might want to be potentially playing to the short side. However, if it goes into a mooning phase and runs the previous high, that could just be a blow-off moment. So that doesn't mean you go long. If it goes extremely volatile up, single-minded, that should actually, again, thinking not to short now, but that it's definitely coming. And watch for that exhaustion. Think Bitcoin in the last 6 weeks when it ran to 20,000. Think the dot-com boom. Think all these things. There's that sort of death knell of lunacy where all the money that's been waiting on the sides thinks it's going to go down, then can't bear not to be in the market and pays any price to play. And you get that final mooning. That means no money's now on the sidelines. You've got people who are buying that are no longer buying on value. It's just get me in. I can't bear not to be in.
Okay, Francis, let me put you on the spot for a second. And we're looking at the 1 year, year and a half time frame here. Could you zoom back out to that weekly scale so we can look at the entirety of the bull market since 2009 for stocks?
Absolutely. I'll get you up on a daily. Let's do that. And in fact, you said 2009, so you're going to want a lot bigger than that. You're going to want the weekly. Yeah.
There we go. That's getting there. Great. So here's the question. We live in a world, and this is really a big picture question that I want to put to you. This is a theme that I've been arriving at, and I want to know your take on this. It seems to me that we live in a world that is very bifurcated at this time. We have extreme periods and extreme entities that are engaged in debasing and wasting our resources, wasting our potential as human beings. We talk about the institution of central banking, which is designed to transfer wealth from citizens to the banking institutions. That is why the institution exists. We talk about the military-industrial complex, which is engaged in the business of perpetuating itself and creating more war for the sake of creating more war. Which is a double negative, blowing stuff up on the other side of the planet, which I participated in, so I know with my own eyes. you know, there are all these negatives happening. Clearly, we can see this. However, I want to interject for a moment. It's like an interjection even into my own thoughts, and pose this question to you. We look at some of the other things that are happening around the world. Elon Musk usurping NASA and sending, getting the contract to send astronauts to the International Space Station. A private company, a guy who comes from South Africa. He comes where? To the United States, to California, the highest tax state in the continental U.S. by far. He comes there, and you listen to his interviews, and he says, yes, I chose to come to the United States, right? Despite all the problems. You look at some of the other things that are happening. I myself have gone through a transformation over the last number of years. I was very sick when I came home from Afghanistan. Part of the reason why I was able to recover was access to technology, access to information, access to resources and medicines, right? That would not have been possible before the internet. Here we are talking. Everyone listening to this conversation is benefiting from the advances that were made when? Let's talk about the lead up to the NASDAQ bubble in the year 2000. And clearly it was a bubble, but there were some remnants of that technology that benefited us in the long run. So the hard question that I want to pose to you, when we look at this chart that you have up here, is it not possible that there is something similar happening now at this moment, that despite those negatives, it's like on one hand we have these extreme negatives, on one hand we have these positives of industry and technology. How do we interplay that? Is it possible that we're maybe not only halfway through a boom in the stock market that is reflecting something that we don't know, or are we walking toward the edge of a cliff?
Yeah, it's a very, very powerful and good question. And there's an incredibly new insight that I've gained, but it's not one that's easily passed on in a short moment. But I think you'll find it enrapturing and fascinating. The key is we have industries now that are this. I'm of the view that we are in this. Governments are inherently fascist at the moment. So what is fascism? My take, as opposed to it just being a slur or you're a Nazi or you're a fascist, is it's quite specific. They're statist. There's 4 pillars that they're pursuing, which is a combination of 3 felonies a day. So they criminalize everybody. So there's so many bylaws, laws, new laws. Everyone is potentially, depending on enforcement and whether you become of interest, a potential felon. So you need to be able to criminalize everybody as one of the pillars. So one of the pillars, I'll write them down here, 3 felonies. Just by going to work, doing what you do, they need you in a position where you've committed 3 felonies a day. That means everyone and anyone that ever became a problem is potentially pursuable on something. The other ones is the digital surveillance state. The digitalization of everything, and then the surveillance of everybody. So it's digitalization of everything, which will be the Internet of Things all coming, that even your fridge will rat you out on how much electricity you're using when you have a glass of water as well. It'll create the spurn of big data, this metadata, right down to the very smallest detail. So digitalization, then the surveillance of everything. So everyone is being surveilled entirely. And then you have the militarization of your police and your the representation of those that look for you. So that fear that all brings. So it's surveillance and militarization of police. Surveillance, and number 4, militarization of police. So in other words, the combination in the beginning of SWAT teams that is now extended into police force type regalia. It's designed to make you wary and to assert strength of state, and not to be on the wrong side of the law, whilst everyone is designed that in some way you are, through the 3 felonies a day. These are the 4 pillars of totalitarianism, and this is what I've done, and this is where we're heading. The other element of this is the corporatization and the blurring of the line of private companies and government. So you already see this in borders like pharmaceutical between the FDA and going out of government to the FDA to being a CEO in a pharmaceutical company and back again. You already saw this in Robin Rubin in Goldman Sachs when he was the ear of Clinton and whispering how and what to do, and then goes to had the Glass-Steagall Act repealed so that the Citi Bank and Travelers merger could go through, and then next thing you know, he's on the board of Citigroup. So this entire nepotistic stroke, corrupt, fraudulent insider cartel band. This is a massive part of where we're at. Now, the banking cartel, so if you've got all of those, and I just wrote here also Tesla private company, I'm going to come to that because you mentioned them, but that's just for your guys watching so that they can see a couple of the bullet points as I'm thinking. What we've actually come to is that banking already is now a ward of state. So there is essentially, banking is not a private enterprise. The profits are privatized, but the costs are socialized. Many people have said that. It's become a bit of a copycat cliche, but it's accurate. And what effectively that means is that banks are told what and where to do by the central bankers, which are loosely controlled by world governments, cartels, think tanks, IMS, Bilderberg Group, you know them, Group of 13, whatever, Club of Rome, all of those. So in essence, banking is already owned. Now, what I'm going to say to you is going to be really interesting, and it's cutting edge. For me, I am seeing the next industry to be weaponized and made ward of state and AKA communistic type state, communistic creep into a new industry to be energy. Energy in terms of the oil companies. So this is incredibly interesting because actually, US is supposedly energy independent at the moment, or close to thereabouts, and all that has come about through fracking. In other words, you've got a swing of 2 million barrels of oil that came across that you no longer needed to import. And what they successfully did, this might be a nice time just to transition shortly away from the SPX and to WTI. What that did is as it changed the game, that we were using oil as a weapon. It's always been weaponized because of the petrodollar, but this was a different way of weaponizing the great oil collapse that occurred in 2014. So you're seeing two collapses here. Might just be worthwhile historically. This was the subprime collapse. And I call oil the Rockefeller tax. When everyone was making money on property, they allow that tax to go up because it's through the oil companies they skim, because it's in everything. It's in you go to the gym, it's in the gym. It's in the plastic water bottle you drink out of. It's in the oil and the grease for the machines. It's in everything. It's in the plastics that you use that cover the chairs. Oil is actually like a tax because it's on top of everything. It's like a general sales tax, a VAT. It's just another name for a tax. And the oil companies have always been very politicized. And we've, as you mentioned, this militarization goes hand in hand with stealing resources in essence. Now, what we did with fracking is we caused a slight glut for a short period, and markets are not stable. This was the subprime. I was just explaining the two crashes. That was the subprime, which was economic activity declined, and they needing to reheat the economy as controllers of oil, they dropped the price and it went super low. And then when we had 14, this is well after gold tapped out on its highs here. It had its high there in 11. Gold, you will remember, is 11 here. We called this inverted. Initially, we were wondering if it was going to go up. We first thought it was going to go up, and then we said, no, it's showing us it's an inverted. You get overperformance in a major new move, and most people couldn't believe it actually ran lower than the most negative time economically we've been alive, which was the 09 lows. It actually ran lower. How did that happen? That glut, what it did is it put the squeeze on all the other countries. America no longer taking that 2 million barrels a day that they needed. You suddenly had Saudi, Venezuela. Remember, there's people that wanted to be hurt by the Americans. Russia, Iran, Libya that hadn't yet been taken over at that point and destroyed, and Venezuela, that's before the current president, but the one before that had given Assange refuge, etc., and asked for their gold back. as well, which is most unwelcome an event to ask for your gold back. It's most rude of them. And so what eventually happened is, but these guys needing a certain amount of money to still cover their social programs, which include Saudi, Venezuela, and Russia, they ended up pumping more oil because that demand was taken out. So oil is priced at the margin. Many of the contracts are long-term. I sign with you, a big oil company that drills in Saudi, for my next 6 months supply at $63, let's say, or $65 as it is now. If we have a major spike, it doesn't hit me immediately, but when that contract expires, you as supplier are going to come back and want more. And in the same way with the gluts, they all had to pump that open market oil that gets bid for, that is determining the price at the margin, because many of it is already locked up in contracts. There was no buyer, and those people needed that money. So they pumped more oil to earn the same amount of money. There was a buyer, but not at that price. So by swinging the dynamic, instead of markets stabilizing, if that's the highs, the lows, stabilizing around the central point, what happens if you suddenly create a glut is you push it to the extreme lows. And in the same way, if you have a shortfall and there's $10 million of demand having to chase $8 million of oil, that pricing at the margin, even though there's tons of other barrels of oil that have been secured on long-term contracts, will push the price to the extreme at the highs as well. So they created a glut that led to a major loss of oil revenues, which is a reduction in the global tax that is on everybody. Now, this was after China was reheating the economy post-2009, and then the wheels had started to fall off, 14, 15. There was evidence that the wheels had started to fall off. So all the demand had gone out of the global economy during that period. During this period, we were all talking about China. They were building cities. They were doing everything. They were taking the copper. You look at copper, it didn't have as an extreme, but it ended up going down, 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 and also bottomed in the China-Shanghai Accord. This was the Shanghai Accord, although they didn't call it that, with the G8. And we were all in very dire straits in 2016.
So, Francis, do you think we're going to make one more low in oil, or was that the bottom right there in early 2016?
I think that definitely is the bottom, but that I don't say it's the bottom because the economy is strong. The economy is weak, but the problem we have now is that the supply and demand dynamics in oil has become an issue. In other words, as fracking's capability to pump and keep America as oil independent moves away, what we're actually going to have is the potential for rising oil prices. That pricing at the margin is going to see the US's need no longer as self-sufficient to chase that shortfall in the open market again. And this is going to cause immense instability. So here's what I assess is going to happen in oil, and it ties into the question, why have we not had inflation and everything else with all the proliferation of currency? People make the wrong mistake. They think inflation is price increases. Price increases is a symptom of inflation. So it's kind of like you get a sickness, malaria, sweating and going yellow and, fever. But that doesn't mean you haven't got malaria yet already, just because you've not yet showing those symptoms. Currency proliferation is inflationary, full stop. The only thing that's stopped an absolute across-the-board price run is the velocity of all that additional money that they've provided has gone down. And most of it has not been provided for you to lend to build your businesses, but by industry, in a communistic, strategic chess game, industry-based way. Government, through the banking system, has funded specific projects. Now, fracking, you just have to, because we're going to come to Elon and Tesla, this all fits in. It's an incredible narrative. Fracking, you can't preach green and then, like Obama did, give all the licenses out for fracking that he gave. It's a complete contradiction in term. It is one of the messiest, non-productive, and dirtiest to the environment systems you can do. You get left with...
Let me interject for 1 second, or let's talk about another two-face. Preaching peace And then escalating the number of assassinations by drone targets overseas by a five-fold increase, compared to the Bush administration. And I'm neither Republican nor Democrat. This is not about political party. This is just, a statement of fact of numbers.
Absolutely. Both Obama and Trump are put in the same can with preaching the priest. You're absolutely right. And in fact, I call it the Masonic decree. They tell you where they're going to screw you by telling you what you want to hear, and that is the acknowledgement of their focus of where they do. Obama got a peace plan. He's the peace guy. Yep. He wasn't so pro-Israel and all of that, and what you ended up getting is you got the advancement of all those agendas. In the same way, Theresa May came in and said Brexit means Brexit. It means I'm going to shaft you by not delivering Brexit. She said no deal is better than a bad deal. What she means is we will do anything to prevent a no deal.
Completely disregarding the will of the British people, right? Completely. I mean, what have they pushed the date back to now? Is it late October of this year? I mean, it's like
a cultist Halloween day.
Right, exactly. This reminds me of the debt ceiling in the United States. It's like every 6 months they just, we didn't figure it out. Let's just bump it another 6 months and $1 trillion. Is this going to happen with Brexit for the next 5 years?
Well, they're going to cause so much Brexit fatigue, and there is such a unity across not delivering a Brexit. Once again, we get loads of stuff wrong. So if I just say we were accurate on something, it's not an ego trip. It's not about me. The only difference is by being both a technical analyst, also understanding fundamentals of a business, and then also understanding the control structures and the conspiratorial element behind them, you get the best overall view of scenario casting what may be. And we practice scenario casting. We don't call it forecasting because that means you're ego tied. Right. We talk about many scenario casts. If you have a forecast, it's what you say is going to happen, and then you're right or you're wrong, and that's a negative. We have lots of scenario casts, but the scenario casting with that is Brexit was going to happen. Even though they had bookies at 6-1 and 7-1 odds, it happened. And then once it happened, immediately I said, and now it's going to be hijacked. And that was in 2016. And all the processes since have fulfilled that. And the only reason is because I understand there's control structures and there's free markets. And you can't always confuse, and you must recognize where they overlap. And oil, the green agenda, which essentially Elon Musk is the flag-bearing hero. I took a picture early on today from my laptop, in fact, which it's something about Whole Earth Day today. Why don't I see if I can just show that to you today? So he is actually the fanboy of the green system as a private entrepreneur. And people know that we don't trust politicians anymore. We don't trust politicians anymore. So having a useful business person, think of Steve Jobs casting an opinion. It's kind of like, it must be right. Okay, he's not a politician and he's a smart guy and made a bunch of money. I can believe him, even though I doubt politicians. So here you go. This was in my inbox. Every year, 1 billion people in 193 countries celebrate Earth Day and the promise of a clean planet. Clean palette, and of course it serves his car company, and he's trying to remind everybody that this is what he does. I want to highlight also that my father was involved in engineering many years ago with the Germans on doing exactly that, battery-driven cars, and it continually was killed by the US. In short, it didn't suit them. The Rockefeller tax and the petrodollar was still playing a role, and they weren't ready for it. And the person who has been anointed with bringing in this new era is selected, much like your presidents. And Elon Musk, to me, has been selected. He's been allowed. Now, in the same way, Trump's casino went bust, and he was selected and carried by his bank through the full property bust cycle and back when it's reinflated again. And at no point was he foreclosed on. He's had to make good. He got his apprentice show to build his profile and get him as the straight-talking business guy. And now he's been called to serve, and that is in the American. So that's the selection process. And it was Rockefeller's Chase Manhattan Bank when he was still, David Rockefeller was chairman when Trump's casinos were busted out and he was overextended in the property market, and they just kept building him an overdraft. In other words, these have unlimited funds. So going back to what was happening in fracking is my call is the Fed will go towards subsidizing fracking. Why? Because it never was an economic business. Every time you drill, you have to drill again, because each time you drill, unlike an oil well, you have a front load of costs. You get your pipe down to, a pool of oil, and you suck it up. You can largely turn the tap on and it starts blowing, and you start paying off all the huge investment costs. Fracking is different. They go into shale, they've got to fracture it and scrape, and they've got to go down and sideways. They've got to pump lots of water in, full of toxic chemicals, create an immense amount of pressure in the rock so that it fractures, and then they scrape and then separate out the oil from all of that. It's incredibly costly, it's non-financially viable, and it is an absolute green lie. You've seen the guys with their taps with gas also coming out through the water. It poisons the water, everything. So the whole concept of it's not a green thing, and they don't care about green. Green is a way that they manage us. It's like a new reason to have a tax, and it's also for Elon to be the cheerleader of this new movement that they're now ready to see reduced elements of petrol and oil, and they need that reduced demand in petrol and oil because it's going to give too much power to the nation states that they are waging financial war on, and some of which they will seek to do regime change on. So Russia, the key point is there's not many countries that actually can deliver the volume of oil we need at $65.77. In fact, we've got a deficit at that level. Fracking probably needs $150 plus. In truth, my impression is the oil price should be right now somewhere between $150 and over $200.
Wow.
That's where it should be for us to have a natural market. Because the price is set at the margin. The fact that Russia can pull it out and make money even at $30 or $40 is immaterial. They're not pumping enough for the whole world's supply. And the problem with oil that makes a difference as opposed to nappies or broccoli is that if oil doesn't get supplied, the world stops. The areas that don't get it, the world stops. We burn coal, gas, and oil for 80% of all our power still. Renewables are only 4%. So that means, you've probably heard South Africa's problems with Eskom. If they didn't pull out coal, it would end. If they didn't have oil to burn, it would end. Most people's power is still there. Nuclear and renewables aside, 80% is still that. So the world stops. So what they're actually going to do is they've got a free market price for 70% of our world needs. We should be paying escalating ever more for that at margin cost. Which actually would go to everybody in the rack. If the oil price was $150, you don't just pay the last guys that you're chasing, the last bit you need. Everybody in the world gets that price. But that would make Russia strong. It would make Iran very rich. It would make, and Russia, by the way, is wanting to be paid in gold, yuan, and rubles for its commodities now, and is undermining the petrodollar. China's doing the same, although they're not a big energy producer, and Iran is sympathetic to that. Libya got overthrown because they contemplated that after he was brought back into the international fold, after the Lockerbie bomber was handed over, etc., etc. So we know the petrodollar will, if you threaten the petrodollar, you get regime change exported to you. So for those that say quantitative easing, where's the inflation? I'm telling you the true oil price should be a lot higher. In the same way they manipulate the gold and silver markets, more and more this is coming. So how will they manipulate the oil? They will subsidize frackers to continue doing a non-economic event. So at a cash flow level, they spend $1 billion to get 700 million's worth of actual oil out. But it's worth subsidizing and you essentially QE to a specific industry that is deemed strategic and important, so that they keep the oil pumping and the economic activity. So you might say, well, why don't they just let the price go to 250? Well, the problem is the entire Western world is peaked prosperity and is dropping. And the economic price of oil to Westerners is far higher than it is to the Chinese. Their prosperity can continue to grow at $5,000 a year average. It doesn't matter if the oil price goes to 250. They're on 3-car families. They're on consuming, flying, and doing near as much of all the things that have lots of oil in it. So a true price in oil would see us go into a far deeper, confirmed and immediate depression in the Western world. Our sensitivity to the economic price of the real price of oil, what it should be, is much higher. And
so,
of course,
Francis, where has that inflation gone, though? If it hasn't gone into oil, if it hasn't gone into commodities, We're looking at
Back
the
to your
CRB
question.
at 40-year lows.
Look at what your stock market is doing.
So
All
it's
that
gone into stocks.
money. First of all, it's kind of like a football bladder. Instead of there being one football bladder, which is all of humanity, which has got all the money that was QE printed, it's gone only into selected pockets. So it's like 3 or 4 bladders. You and I are in the general sheeple bladder, and we've not get an extra proliferation of that money. It's in the books, but it's being pushed into industry-specific means. The banks are lending to pet projects of the overall cartel's best interest. AKA, we need to keep the oil price down. You've seen Trump saying, hey, the Saudis must keep pumping. We need to keep oil down. The economy is not that weak. Please help. Thank you. You know, those tweets, quite courteous. He needs that. It's the big problem of our day, because actually there should be inflation visible in oil. But if you've got a Fed that's going to create and print money and subsidize an industry, and they see that as the least bad decision, instead of us having $250 and the Russians having loads of extra money for military and buying gold, what are the Russians going to do? They're going to expose the precious metals fraud even quicker. That's another market that's been manipulated.
So this is an excellent segue from oil to, I want to talk about Fed policy, interest rates, and bonds a little bit. There were a couple charts that I had, but I don't know, maybe
I'll pull them up for you.
That'd be great. Yeah. Can you pull up that, do you have that US 10-year yield chart handy?
Yeah, you want the yield specifically?
Either the yield or the bond price, you know, either way will be fine. We could talk about it either regular or inverse. There we go. Great. And if we can zoom that out, yeah, excellent. If we can zoom that out, you know, as far as possible. Okay, so they're giving us data through back to, what is that, the late 80s. Okay, great. And
this is perfect, by the way, because this 87 is when Greenspan started.
Exactly.
And he was the beginning, he was the most damaging central banker we've ever had.
Yep. After, you know, some of his earlier writings in the 1960s, he was pro sound money. You know, he had some of the famous quotes about how gold is the protector of property rights in a fiat system. And then as soon as he got hired by the Fed, it's like he bowed down to the powers that be.
Well, my view is they say the things they need to say for populism when not in power, only to answer to those that pay them, who they really work for, as opposed to those who vote for them, who they don't consider themselves to work for.
Yeah.
Everyone. Corbyn's out of power. We must respect the election's result. Now he's talking with Theresa May. Hey, we should have a second election. Brexit doesn't mean Brexit so much anymore. All sorts of things. If he's starting to sniff power, he starts twisting his story. It's the same thing always. You say responsible things when seeking power to win populist appeal, because you're courting two masters. But the real truth is, by the time you're on and the payroll, the way you monetize is you serve the man who pays you. And the man who pays you isn't the man in the street, it's the cartel.
Right. So let's talk about these. I mean, I completely agree. But as far as the market goes, these yields, you know, so we've had, and by the way, if we were to extend that chart, I think we remember that yields actually peaked in 1980, similar to, you know, 80, 81, low 80s. Right, under Volcker.
82, yeah.
82, yep. You know, almost the same time as gold, plus or minus a year or two there. But, you know, so we've had almost 40 years. We've had over a generation of falling rates. In other words, people moving into bonds, buying bonds, and thus suppressing rates for almost 40 years. Now, so essentially the bond market, I always call this the 800-pound gorilla in the room. It's like investors just whistling past the graveyard, just willing to accept less and less and less of a return as time goes on for the privilege of loaning the U.S. government money and supposedly getting that money back, even if it's not paying a real interest rate. So we have this on one side, this seemingly irrational behavior. Yet we know the Federal Reserve was in the bond market starting in 2008, buying bonds. They said the entire time over the last 10 years they were going to extinguish or normalize their balance sheet. We talked about this at the beginning of the podcast. And here, just in the last 2 months, Jerome Powell coming out and saying, oh, remember those promises we made in 2008, 2009? Yeah, actually, we're not going to really do that. We're just going to keep all that printed money on the table. So the idea that this is one thing that I say often when people ask about manipulation. I say, of course there's manipulation on the small level, on the large level, yet this is how the world works. So it's like, get used to it. This is not going to end. If it frustrates you, then you shouldn't be in the market. You shouldn't be trading. You shouldn't be investing in these markets. Keep US dollars in the bank, earn your 1 or 2% in a savings account and be happy with that. Otherwise, you better learn to live in a market with manipulation. It's been going on since 1971. It's going to be going on for the rest of our lives. This is not going to end. Sorry, a little soapbox rant on my part there.
No. It's a very good one, and you triggered a few things on me. I mean, our logo right here. There's the crypto industry, the crypto sniper. The market sniper is the method for trading markets. And the reset sniper is the recognition of control structures' role and how they intervene and pervert markets. You cannot be the complete trader if you do not see how these things work. In terms of the politics and the undermining and the intervention and the engagement in markets as well. So this is why, and very esteemed guys like Stanley Druckenmiller was short Tesla. Because on paper and on fundamentally, it's the same as fracking oil. It's a bad cash burn, low return, huge cost for the share price per car that's been sold. That sold very few cars worth more than X, Y, and Z. And my point is, you're forgetting it's not a normal market. It's not privatized. He's subsidized. Those subsidies are going to run out, and I think he will be subsidized even beyond that if he needs it. In short, he's too important to be let to go bust because he's the future they elect for. And as a result, he will have a bottomless overdraft to continue to get cocking up. And he's doing the favor of running with the SpaceX space scam and all of those narratives, which with NASA and with anyone who does space, I think is very definitely, especially when you're replacing something like NASA spend largely, means you are a deep part of the control structure and deeply funded. You don't cash out 120 odd million that you made on PayPal. Look, he's made money elsewhere, but run a space program and a car company and buy battery factories. I'm sorry, that doesn't just not on that $100 million. Not even with the wildest of dreams. Yeah. Yes, he's raised other money.
Maybe a B in front of that one to pull some of those things off.
Just burning enough fuel to get a rocket properly into space is unbelievable. So the whole notion is you have to see where market rules apply and know where the banana bends and that it doesn't. The normal rules don't apply. You're in a special zone, and you have to recognize who are the blue-eyed boys in this game that will have a fund run after them, and they can pursue non-economic activities on an open-ended basis. And certainly that was one. I mean, some of the unicorns, generally, I would say also, Amazon is very, very surveillance orientated. They run the defense, the US defense servers and everything. These are what I call quasi control structure companies with a private business also associated. He was allowed to run at a loss for an immense amount of time and build a market share. How would I be able to just keep running losses and burning and scaling to be this global business? Yeah, okay, he thinks big, but who gives you the overdraft to think that big? That you throw every revenue. And Musk is a more extreme version. Now Amazon is a huge profit center. Everybody knows it. Dominates retail, etc. Will he get to that point? If he's selling 1 in 3 cars and they're all they're all hybrids or electric cars, potentially could be. But no one gets to be that wrong for so long in the short and medium term to ever get to the point where they're damn right later, unless they've got an unbelievable amount of money that will just carry them through depressions, recessions. There's a glut of cars. There's an absolute glut of cars everywhere at the moment. And they're the glut of the wrong cars as well. The truck companies, for me, Ford, GM, relying on $85,000, 5.7 Hemis. I've come to the States often, all of that, with the oil price needing to be where it needs, fracking going to battle to produce the production. All the wrong kind of cars are there. They're on 72 months finance, which is my father paid off his house in that time. And you bought half the car with a balloon payment at the end. These things are going to be like H2 Hummers, only worse, are now for reselling. Good bloody luck. Try have a Hummer in central London or Europe. It's like it's like having a camel in Iceland.
Yep.
It's going to be bugger all use for getting around and pretty darn expensive and high maintenance. So we've got to stop seeing everything as pure logical, because when you understand the control structure and the 4 pillars and the surveillance state and how energy is a key chess pawn for denying your enemies of higher than normal revenue, to the point that it's worth you printing your own money and destroying it. If you can, for $1 trillion a year, keep fracking and bringing in the margin amount of oil you need to keep the oil price low enough so that your entire Western community doesn't go into serious negative prosperity and lead to yellow vests running the streets of Paris.
Yep.
Add the tax rates in there, and they were already at it. Imagine the French protesters were facing $150 to $200 oil right now. There'll be a lot more of them out there, and Macron would have an even bigger problem in his hands. So the inflation actually is there. It's in your SPX that has a ridiculous valuation for what it's yielding, because there's too much cash chasing too few things that yield anything. It's in the oil price that isn't where it should be.
So we're back to John Maynard Keynes. Markets can stay irrational longer than you can stay solvent. It's the money is going where it goes, and it doesn't really matter what the fundamentals would say.
When you say markets, I don't talk free markets with a legitimate price discovery mechanism with fidgeting supply and demand, dark hands behind that. I'm saying we have a mixed economy with already a communistic subsidy of certain industries that are affecting that market price.
Yes.
And as a result, they've kept it in balance roughly where they need it. But any downturn in fracking or return on that yield, even if they're continually burning cash to keep doing it, and the oil price is going to twitch to the upside, and it's going to put further pressure, as I say, particularly on US car makers, but car makers generally, there's a glut. So that's a short for the guys. If they're looking for trades, look at your car makers. Look at your car makers with heavy exposure to big trucks that are non-economic and are not future-proofed with what they plan on bringing. The other part of Elon Musk's model that is very, very powerful, that ties into my 4 pillars that I wrote up, is it's totally surveillance state. It's totally tracking. And on top of that, we're going to reach a point where there's another thing they like to do is they annuitize income. In other words, they tertiary extracting economy. The sheeple must continually be bled with yields. So every time they can secure a stream of revenues out of them. So the car makers, to keep costs down, because there should be inflation in the car prices as well, not just in the fuel, what they're going to do is going to sell you a basic frame of a car in future. This is what's coming, and I've spoken to a high-flying exec in VW Group and in Audi and future, and this even ties into blockchain and crypto as well, is that they'll put an aircon. They're going to build one model, a fully spec model. You're going to buy it at the base model price, and you're only going to own the frame and the motor. It's almost going to be like a lease to you and the seat. And the aircon and maybe the heat seat warmers, anything you utilize. Eventually, it could even go down to the windscreen wipers, which you could argue is a basic aspect of the car. Every time you utilize it, they will say, you only bought this for this, so you're buying only the basic car. We're renting all the extras out to you, and we don't give you an option for no extras, or if they do, they cost the same price. So the manufacturing line can be cheaper. They build one interior. Those, when you take those internals like an aircon, they tertiary extract from you every time you use it. So you jump in the car I sold you, Chris, and every time you turn that aircon on, through the blockchain that will be mobile linked and tracked on your car. I have the amount of time you've used that aircon. The aircon belongs to me as car manufacturer. Through blockchain, you will need to have X Bitcoin or whatever the coin is of choice, the token of choice, and I will be trimming it to boost my margins because the car prices need to be higher too, and we ain't making any money. They're making money more on servicing now than they're making on car sales. In fact, there's many cars that sell very, very close to a loss, and the commissions on car sales are actually getting very low. Ask guys that are car salesmen in your area. It's the finance in America where they make the money because they essentially a bank that just happened to give you a product and get you into a loan. Really. Yep. If you pay cash, you're a real pain in the ass. They say, why didn't you finance it? Why didn't you finance it? Take the finance. Take the finance. Why?
Which is why they got bailed out. GM, Government Motors, they got bailed out because they're mostly a bank in the same ballpark as many of the banks that are owning the Federal Reserve. So,
and this is what I call the financialization of everything. They call it the Internet of Things. The Internet of Things is so that they can financialize everything and turn it into a tertiary extracting thing. You've got a car maker that got its bailout because it's a bank. So actually you've got government's communistic tendencies extending into car manufacture. But their excuse is it was banking and it was loan related. But they'll soon bail banks out. We've already had clearance in the EU that the EU Draghi can buy corporate business bonds of big car makers now.
Yep.
To keep them upvalued so that when these companies fall, they employ a lot of people. So many things are non-economic right now.
Yep.
But why do they still sell at that price? Because the prosperity has turned down. We should have inflation because of all this printing of money. They have to keep the car prices at that price because people will not wear it. If all new cars doubled and oil was $250, well, you can just say goodbye to VW, Peugeot, Fiat, and all the American car companies. Game over. So what they now do is they're going to find new ways of revenue. They'll simplify the production. You get a fully spec car. You only own the shell, and you get tertiary extracted, and they earn back for putting in an aircon. They earn back for every time you use your wipers. They earn back for any service that is separate that you've taken as part and parcel of your product. And this is what's coming. And they'll probably use blockchain and crypto to claw that because it can be real time. They want their money quickly. They want it to compound.
This will be an amazing time to be alive. I'm thankful for the experience, even if it's filled with challenges and road bumps along the way.
Well, unfortunately, I can't help but say to you, Chris, these are government overextension times in terms of overreach in everything. And you've got to look beyond that and say, why do they need to do that? And they are statist and fascist. And true libertarians want small government and want government out of everything they do. And in fact, the internet and the web and the blockchain and all of these things are weapons as well as what you think of them as gifts. With every gift they give you, they're a huge weapon. And they're weapons that are bringing government into everything. And they give the notion, if you've got nothing to hide, what you're worried about. The point is, that's a fake excuse. The 3 felonies a day means everyone's got something to hide. No matter if you're the straightest Joe in the world, you've committed a felony. These cars, by the way, that Tesla got, VW Group took one offshore and had it delivered via an intermediary. It went to Europe and they wanted to strip it and have a look. There's actually a war with VW. Musk has got it in his head that someone who's a friend of an employee of VW keeps bringing up dirt on Tesla. So they're trolling it, etc., etc. Those big car makers are going to come with their own versions, etc. But anyway, they took a car to Europe. It was remotely disabled entirely. The first day they were able to start it, look at it, boom. It was immediately detected. The next day they came in, they couldn't use it. It had been immobilized, it was unusable. So literally you had this object of parts that could do nothing, entirely reversed. And when they got the intermediary to contact the person to say, hey, what's going on? You bought the car. They said, we've detected that that's been removed from the US. It's when it started, it gave us a signal. You're in such and such a place in Germany, which was by the headquarters of VW, where it's not allowed. It's not a Eurospec volume, and it's been disabled.
You know what this reminds me a lot of? There's this memory that's coming back to my mind. There's this there's this story within Orwell's 1984. And just for reference, we had to read 1984 in high school. You know, I'm going back into the 1990s for me. But we had to read 1984 in high school. But the part that they focused on was more the obvious sort of, you know, Big Brother. There was the screen. They're going to be looking at you. You know, the mind control, things like that. It was the obvious themes. But in my own reading of 1984, going back a few years ago, I started to pick up on some more advanced or more subtle themes that were kind of brought in there below the surface. And one of the ones that I just, when I read this going back a few years ago, and I really started to grasp what Orwell, and of course he was, from what I understand, he was fairly privy to some of the elite social circles in Britain in the 1930s and the 1940s, you know, pre-war and into the war. And so, you know, he wrote this book of fiction, but it was really written as a warning to individuals who would listen. There's this part which is the book within the book. Do you remember what I'm talking about? It's the manual by Emmanuel Goldstein is the name of the character. Do you know what I'm talking about?
No, I don't recall. I'm going to have to revisit it. It's been a long time since I read it.
So it's about 2/3 of the way through the book. For anyone listening, it's called the Theory and Practice of Oligarchical Collectivism. And he basically spells out what the statists, what their philosophy and their practice of that philosophy was. And I read this, by the way, I read this when I was in Kuwait in 2009, you know, participating in these wars myself, you know, part of the party myself at the time, before my awakening, so to speak. And I read this book within the book, and he talks about how the goal of the central powers was to keep the wheels of industry turning, keep people producing things, but not let them benefit from the inherent power in our collective, the fruits of our labor. And so that the way to do that, he says, in theory, what we could do is we could pay people to dig ditches and then fill them back up again.
Yes,
because that would siphon off. If you think every time you go to work, every time you produce something that benefits society, benefits your neighbor, or helps someone, but the way that we could stop that is by siphoning off the labor. He says, in theory, we could do it like that, except people would soon catch on. They would soon say, hey, you know, we're all of our labor is going down the drain. So basically, what he says is the one way that the powers that are trying to siphon off our resources, the one way that we can do that is by what? Taxation and war.
Yeah.
Because war is, you know, and they talk about this, how once a year they would lob a missile into central London with the false flag, you know, sort of idea. And this is, of course, fiction that was written in the book, but there's allusions to perhaps things that happen in our lives. And that by the pretext of war, they could pay people to produce things that benefit society nothing, and then they could take that product and blow other things up on the other side of the planet. Because if we had the collective powers that would come from our resources to actually use to benefit us, that we are much more powerful than some would prefer for us to be. And that this is sort of part of the strategy. So anyway,
divide and conquer. Absolutely divide and conquer. And as you say, tertiary extraction and taxation, and keeping you needing to run on a treadmill because you're just getting by to cope with your living. And the notion of the whole concept of interest, borrowing the first pound into existence, but requiring an interest on it that actually requires more money than already exists, is naturally determined to have an expanding monetary system in supply. And the greater you proliferate new loans, the greater the interest earned on that is beyond the existing monetary supply. So you're always destined to this bend in the road that I think we're coming very, very close up to. And we owe it to ourselves to recognize that the system is designed to fail. And in the meantime, communism, what I'd call a fascist, communist, overreaching government state is what will fill it. Capitalism dies and bequests, not that we had true capitalism, we have certain capitalistic elements, bequests us the socialist, communistic control state model, which is implied in all of this. And they will make bad investments, non-economic investments, for strategic reasons. As I am expecting, they will bail out the banks that lend to the fracking guys, or buy the fracking guys' bonds when no one else is prepared to invest there anymore. That's the next step. Just because strategically they need that at the margin number of barrel of oils that keeps the price at the place that it's at now. And in the same way, the car industry that they want us to be in, this guy, the shorters are right on balance sheet level, wrong on control structure level, because they don't understand this has to succeed by their agenda. And Musk has been selected. And the space game proves it, that he's on the inside for me.
Francis, do me a favor. Could you pull up the gold chart, please?
Absolutely. I've got a few things to show you on precious metals, actually, because I know your audience well, and it would be remiss of us to not check in. I just thought I'd show you this Tesla chart because it's come into existence a bit. That 380 max, a real central flaw. I talk about the key levels of significance that are always just run, and then you fail thereafter. You see 4 there, 5 there, and 6 there with just a little tip-tap-toe. That is your $260 mark, your 180 here, there, well run there, almost run there and there as well. And then your highs in and around, I think it was 380. I've not drawn the line perfectly. There, and there. And we're knocking now, getting out of the first floor and maybe dropping into the basement. And we've come back a number of times here. So be warned. But be warned that you could be suddenly news and FOMO spiked at any point as well, because there's a bottomless pit of money that will ensure that this company doesn't go down. So the shorters are right and will lose, in my view. And that's my take on that. Let's show you some precious metals, because there's some interesting conclusions to be done there.
Let's get to sort of what everyone wants to see, I think. What everyone's curious about. So let's pull up the gold chart. Now, let me ask you, okay, we have silver here.
Okay, can I go gold. Silver first? Because there's a trade in this for the guys.
Great.
We'll start in this. Silver has been underperforming, as you're aware. We'll do the gold-silver ratio as well, the relative values, as you know. And I've said the guys are calling bull too often. They've got to remember we're bouncing along the post-highs bottoms. Here, and then we are there. So this is bottom scraping. Yes, it had a little run, but it broadened quite widely, had a sell-off, had a squeeze, and that squeeze resolved to the downside. We warned at that point because everyone was feeling quite chipper and bullish mid-2018. We said this is going to probably be downside. As I say, we get loads wrong. That's not meant to be meant. But this is interesting. In fact, 4 hours is a bit long daily. I want to just show you that, in actual fact, I'm currently mildly bullish silver.
Okay.
A mildly bullish silver. I think there's a chance we might get a move. So just taking it in the short term. Bullish, as I say, I don't think that the bottoming is done, but generally, more often than not, when you get a falling wedge, let's get the pen back up, which is what we have here, you have a resolution to the upside. So what it's actually showing you is that there's tactical retreat value buying. That's not just capitulating and running away. Along the lows, there's money coming in. You can see the hammer tails there a couple of times, money coming in. And then you got a little squeeze, you resolve to the downside, money coming in. Let me now circle that 1480 level and highlight something else that was going down during this period. That's that green line of lows, key level of significance, $14. $14, $14. Left shoulder, W bottom head, so I'd call that a head of a head and shoulder inverted, and then you've got a right shoulder up top here. Neckline, once again, by HVF method, we always look for a key level that is just run. 14.8. Run, 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 just touched and run, just touched and run, just touched and run, touched and run, then dipped and then broke. So that's a lot of touches and runs. So you have a right shoulder here. Now that resolves with a target that has already happened from our 14.8 and our 14. You've got a $0.8. You're going to come out at around 1560 target. That was run there. So that was a key level. That's why we started to make marginally higher highs, only just a higher high. So that's going convex. You see the relationship of the highs going convex. That points to a major pullback. What did you get? You got a proper slap in the face, and then you've had pushbacks against this, pushbacks against this. You've now retreated to this key level of significance, which should be quite well supported. Rising wedges, falling wedges do three things. They either have a final dip out the bottom, which I'd argue we may already have had. So if I clear that, you dipped out the bottom. You may have one more little bit of a dip and then come through, but then generally you will get some form of an upside move. And I'd be looking for that previous target of that head and shoulders in and around the 1560 at least to be made. And you could have quite a tight stop. So we gave this trade to our community. So in my community, this was the trade idea. I'm showing you a chart that was shared a couple of days ago before the meltdown. I suggested this is going to melt down. As you can see, that was a squeeze downside, be a buyer around about here, stop at the right shoulder, and then look for that 1580. I think we get a little bit more than the 1560. So that's a reasonable risk-reward trade. That's just showing you something that comes out of our community on the Sniper Circle, and I've updated it again today. And you can see all the key levels in that. Silver is interesting. It's more tradable than gold. That we have a sort of WhatsApp interface that it all appears in, and the ideas are shared as well as setups. So let me show you gold now.
Yeah, that'd be great.
While I show you that load. So let's head over to gold, and we'll go straight to that one.
And let me ask a question as we pull up the gold chart. You know, we've talked about this inflation that's been building in the system, yet the central bank can, to some extent, funnel that inflation in certain directions, you know, to preferred assets, preferred institutions, even, and this can go on for years and years, decades even, you know, that they can do this kind of thing. They can renege on their promises. They can say, hey, you know, we're going to extinguish the printed money. Oh, we decided not to, actually. You know, Jerome Powell just doing that 2 months ago. So when we're looking at gold, you know, and we've been in this, I mean, gold peaked in 2011, just above $1,900 per ounce, had almost a 50% Fibonacci retracement down to that 1045 level in 2015. And we've been in this grind, you know, we've been in this grind here for the last, I mean, certainly the last 3 years. Really, though, this has been almost like a 6-year kind of grind right now. And so a lot of people have grown frustrated with this market for understandable reasons. The question that I have, though, is sort of, so here we are, we cannot, it seems to me, we cannot rely on the precious metals to accurately reflect any sort of fundamental developments. I mean, should they do that? Yes. But do they do that? No, for a host of reasons. So first, so it's a two-part question. So where are we in the precious metals, in your view? And secondly, if we can't rely on gold to necessarily rise in direct proportion to the inflation, how should investors view the precious metals market then? How should they approach this market so that they don't have their hopes shattered when it doesn't move in their expectation over the short run?
Yeah. So just in the short term, I'm going to ask, because you've got a macro and a larger issue here, and then there's just a short term for now with the market we have in its manipulated state or whatever state it's in. I'd expect gold to still do a falling wedge and a little bit of a bump after it's come off a little bit. It's not quite the same as it was with silver. Silver is relatively in a better state, which is not a bad thing. I think the silver move will be better. We'll come to the silver-gold ratio. We need a higher move. The reason why none of these gold advances has been believable, and I've said, guys, it's still not a bull. It's still not a bull. In spite of some fairly strong moves, it's still not a bull, because we'll come back to gold. We have to go into the gold-silver ratio. And this is a very, very key chart. And bull markets are well signaled by the gold-silver ratio, and bear markets are well signaled by the gold-silver ratio. You will recall the 2008 panic moments. You had an extremist here just sub 90. That means it took 90 ounces of silver to buy one gold. That was a very bearish time for gold and silver. It was deflationary. Everything was running into the dollar, etc., etc. Then we got the bull market you referred to as 2011, and I think it was the end of Q1, beginning Q2. That is your lowest point of the modern era, just approaching 30 silver ounces. So we've got 30 and 90, and your midpoint, because I call this topsing and tailing, the modern era. We know that we've had 15 in previous eras, but just with the data that I've got here, which we'll call the key central banking manipulation era, which will potentially unwind as well. So there's no harm in looking at the bigger history. But this kind of has been your buy and sell indicator when you're roughly in middling and when you're getting close to extremists. We are at 85 and we've tapped at 86 and we've tapped at 86 again. And we're not very far from the all-time high, which was in and around 89 going 90. So this is saying every time it's taking too much silver just to get a single ounce of gold, it's a very bearish negative precious metals market. So I've remained bearish throughout this period while this ratio has grown. We got a slap in the face, beautiful geometry there. That same line is the same length as that line. But instead of continuing into a bearish it just went back into its channel and continued to grind up. An even tighter channel. So we've had two channels with a slap in the face event, which was a bit of a scare. This was all tied in with the China over-indebtedness period, which came out beginning of 2016 and ran to the mid-year. That captures that event. And they put the genie back in the bottle with the Shanghai Accord. They said, don't worry, China, you created the heat for us. It's like a tag wrestling team. Everyone else was exhausted. They gave the Chinese guy the chance to jump into the ring, and he did some beating up of the sheeple and consumption of commodities, etc., pumped heat, particularly into Australia, a little bit into New Zealand, but generally into the global economy. Then he's flat out exhausted and indebted like everybody else. What people don't realize is the same strategy is seeing that all the national states all over the globe in different regions are getting into a synchronized over-indebted state so that they can all fall down together, ring-a-ring-a rosies for your New World Order solution. So there is a synchronization by intent. So they're all in on it. So so historically this suggests that we're getting very close to a sensitive area where a bull market could begin. And that wedge, if we go back to the gold chart, so if I just pull up gold, you had both the falling wedge here and the silver, and if I get the Goldie back up, you will see that whilst not a perfect falling wedge, I don't think this is going to perform like a descending triangle short necessarily. It may make it, it may not, but I think the longer run, once we've had a bit of a move, is going to prove a little bit better. So spill off a bit, and then at some point, some impulsive price action on the short term. I'm not sure this is going to be runaway, ripping, mooning, Bitcoin final months of 2017 type story, but there'll be some recovery because that XAU, XAG would need to make new higher ground that it's not done in the modern era ever before.
Okay, so this is actually a question I want to ask. So I've been looking at this chart as well, the gold to silver ratio chart. I bring this up, every once a month or so in videos and whatnot. Do you see any possibility when you're analyzing this chart that resistance level up around 85 to 90, that zone, that actually breaks upward and does the unthinkable? In other words, we're getting multiple taps to the upside, and something is happening that we're not aware of that causes silver to become more undervalued than ever in recorded history.
And that would be bearish for both gold and silver, but more so for silver.
Right.
So they would all be going down. Just the rate, the beta is higher on silver. If the S&P 500 spiked to new highs, if it did a spike, this would probably spike because the two metals would go down because you're getting asset appreciation on the SPY. This is the insanity of money chasing the wrong assets going to all-time highs. I've actually done an S&P 500. I'd like to encourage your guys to do valuations now, relative valuations. Because if they were to, for example, put the SPX in here, and I'm using TradingView, by the way. Let me just get a divide sign, divide, and then I'm going to go XAU and go, let's go OANDA, what the hell, and we'll enter on that. This is going to give you your SPY index divided by gold. How many ounces of gold does it take to get a basket of your SPX index? That was a pretty bad choice to go OANDA because we haven't got much data. You'll notice when we're at the bull highs, it's not sufficient data to be too in. As you had a rounded bottom, this was our 2011 bull highs. That was taking only 0.6 ounces of gold to get 1 unit of the SPY. We had very high 2.29. We tapped out shy of the 2.5, and we had 2.5 here and here. Now, if I did a different index and maybe didn't use OANDA, I might get longer data because we kind of need the dot-com boom in this and the pre-2008 crash. So let's just see if a different index...
Yeah, I know what you're talking about. It actually went even higher, but that resistance zone that you're talking about right up there around 2.5 is... I confirm that is the strong resistance that is being challenged right now by that SPX to gold ratio.
Absolutely. And I think guys should do these relative value assessments. Now, I've done a bunch of relative value assessments prior to us interviewing and chatting, just in preparation. And I can say at the moment of the precious metals complex, platinum is the most undervalued, followed by silver. And then we get to gold, and then we get palladium, which is the most overvalued.
Right.
And the interesting part of that is palladium and platinum are very, very similar, and they're not often spoken about by precious metal bulls. And they have very unique properties, and they're very, very similar. Almost, not exactly, but almost interchangeable. Catalytic converters, jewelry, and then bullion being the key things that they use. And very unstable nation suppliers like Russia and South Africa as well. Russia probably not so unstable, but South Africa's going right down the rabbit hole in some senses on certain things as well. So let me see if I can just get a longer data period on that SPY versus the this is better. This is much better.
Yep.
This is much, much better for your guys just in terms of seeing. Now, what they would see is that in 2000, I'm going to change that to monthly even. We got such a nice big run of data here.
So it can go a lot higher in a true mania, a true bubble in stocks. Gold can become even more undervalued than it already is.
Exactly. In fact, gold is not... So let me just clarify the context I'm making the statement. In my view, all precious metals are hopelessly undervalued because there's this, like I described in oil, there's a window being held open because the Chinese and the Russians, less so the Russians, they've done most of their treasuries now, but the Chinese have got a window left open for them to buy gold for the loss they will take on their trillion-plus holdings of US. I think there's a deal in there. And that's why they're holding this window open, yet not talking about gold because technically you could buy it too at this point. So I think the lid's been held for the Chinese to get their fill on gold, and they're doing it and being told, just hang on to your debt. We know you might ride a major loss. It's a losing asset, et cetera, et cetera. It's a scam. All our pension funds are stuffed with it. We're going to do reset, and we're going to do our whole plan, of which all the major leaders, I don't like to call them elites, but insiders, all privy to. And for holding the bag, they're getting in something else that will go up immensely in value. I mean, if we have an IMF SDR bailout, which is all the currencies in a basket, even though it's a portfolio of crap, they'll do like they did in subprime. They'll call it A-rated. and they'll slice it and dice it and say, now you have this whole new unimpeded currency. Meanwhile, it's made up of a bunch of indebted currencies. But they'd probably want to include a little bit of precious metals in that just to dilute it with some real quality. And they'll also say certain nations will then make disclosures of how much precious metals they have behind them, which will raise and elevate the yuan and the ruble. The yuan has already been put in the SDR ahead of Britain and Japan in scale. So they've been future-proofed for being a major currency holder in this. So this is it. But actually, if we didn't take gold and you took platinum here, the graph that I've got in front of you, the chart that I'd go in front of you would be quite a bit higher because platinum is just terribly underperformed and silver would be somewhere like that. If we put palladium, the chart would be something like this because it's mooned and there's plenty of scope. But palladium's a bit niche a market to really take as a serious. But palladium's interesting because of its relationship to platinum.
Do you see substitution coming into that platinum and palladium spread? You know, in other words, you know, car manufacturers or jewelers basically start saying, hey, at these prices, why don't we switch over our manufacturing systems to platinum?
Well, just have a look since 2009. You could have had 0.2. This is the disproportionate. So what are we looking at? We're looking at palladium divided by platinum. 0.2 ounces of platinum bought you 1 ounce of palladium. Now it's 1.6 the other way.
Yep.
I mean, that's pretty insane. And we should have probably, out of fairness to the guys that are not familiar with the charts like you and I are, first show the platinum chart. Platinum hit 2.3 in subprime. Many people forget that. It's always been more valuable. I say always. Most of its lengthy history, it's always had a premium to gold, platinum. It's got very few sources. It's difficult to find, and it's available in very small amounts. It's got real scarcity. You think gold's scarce, platinum is properly scarce. It's smashed down much harder, however, because it's also in autos, and it had an industrial use, and then no one was buying. Its rebound only took it to 1900, 2011, and gold was just about 1900 itself.
Sorry about that. Hey, Klaus, over here. My guard dog is on the watch.
Doing his job.
Doing his job. Yeah, that's a good boy. Hey, settle down. Sorry, Francis, go ahead.
No, carry on. So 1900, you had platinum essentially very close in level to gold, only marginal premium, if not, and it started to give up its premium, and it's just been bare since. And in actual fact, you came very close to 750, and we had 884 today. So this is an undervalued metal, the most undervalued at the moment, and I've purchased some of it. Silver is next, then gold, and then palladium. So when we look at palladium on its own, the chart, let's look at the most bullish metal, if you'd taken it, and that's that chart.
There we go. Yep. The parabolic sort of blow-off underway as we speak.
And a textbook bull flag there as well. If you see that channel up to there, lovely like that, and very geometrically accurate as well from here up to here.
Right, and then to retest that breakout, right?
That's right. So target very closely done and nice grind lines there. It's been a very strong market, and this is just an absolute runaway market. So I wouldn't be buying palladium, but not many people would be thinking of doing it. But it shows that not all precious metals have wilted. You've got palladium that's done very well. Platinum has wilted more than gold and silver. Silver is the second ugliest of the two. So if I just do a silver, I'll do some silver versus this is against palladium. You can see that silver's at virtually all-time lows, cheapness to palladium.
Yep.
So silver is very interesting. That's since 98. You've had one period a little bit over here. So I call this the tops and tailing technique. You genuinely want to be a buyer at these levels, and you want to be a seller at these levels. And that was just an absolute moonshot there and there. And that was, of course, when silver fell just shy of $50. In fact, sorry, that was the collapse. That's the $50 one there. that high, and that was 2008, where we're comparing. Let's do silver against all of them. It's a popular precious metal. We know palladium absolutely mooned it. Just before the break, we showed you that hockey sticking chart with that great bull flag. So it's obviously going to be a very tough benchmark. But what we can see, and those many will remember, 2000 as a great buying time for silver particularly, but many precious metals as a whole. We're getting into the silver buy zone that I've marked here. There was the last time. Who wouldn't have wanted to be buying silver at 2000 into the end of 2001? And we're getting back into that period here in relative valuation. In other words, a single palladium only needed 0.012 of an ounce to get a full ounce of silver. I could have done it the other way with palladium as the primary, but I chose to do silver first because it shows the undervaluation. So you're in a buy zone relative to palladium. Remember, this is just relative to palladium, but there's lots of cross pairs we can do. Let's look at silver. Let's follow through the line of logic here and follow silver to platinum. You can see because platinum has been underperforming, this doesn't look near as cheap. It's in the middle somewhere, but it has been trending up. Now, we don't have enough data, but what we've actually seen is platinum's kind of become more and more undervalued in perception. And we've got a little bit of a compression point there. So silver not looking as cheap when you compare it against platinum. So the question is, okay, we should look at platinum. Maybe it's all-time cheap relative valuation. We did look at gold, and we could see that this gold-silver ratio, silver is cheap against gold. It's cheap against palladium. It's just not so cheap against platinum.
Yep.
So we go, okay, if we want the most undervalued one, why aren't we talking about platinum itself then? Let's dead him. So let's just remind everybody that's platinum against the dollar. Great. While we got it up there, let's do a run through and divide it out by, if we divide platinum by gold and we get it up, XAU, USD, let's get the ICE. It had more data for us, so we choose that and we enter. And this shows you, now the interesting part of this chart, not the most amount of history that I would have liked, but the interesting part of this technically is that on platinum, massive loss of value on the subprime that it never regained. So that's been a big issue. I think palladium ate some of its dinner. But what you do definitely have here is a very, very large time frame, multi-time frame since 2009, 10 years into our recovery, and you got a falling wedge.
Nice.
And you could argue that you could be in a point where you're about to break. I've gone a bit fat pen there. So if I just drew that again a little bit more precisely.
But that's okay because it's a big picture look. So what we're talking about here, I've actually been talking about this over the last several weeks on the show, the opportunity that's setting up in platinum. So we're kind of on the same page here. You're looking at more of the ratios, which is good to see.
Yeah. Yeah, so platinum again against silver, which against gold, sorry. Yep. Let's look at platinum against silver because we know silver is already a little bit undervalued in our view, but not necessarily the most undervalued. And then we've done with the relative valuations. Because I like this. It's you need to do 360-degree analysis. You know, how is it to compare? This is within the precious metal groups. I split hairs. I mean, I go and look at it against oil historically and other core commodities of great interest as well. You can see platinum again looking a little bit undervalued even against silver. It's at a level for what we've got here. This doesn't give a great amount of history. I would look for more histories. Again, I would play with the exchanges there. Maybe if I change that exchange, we could do a bit better. Just for getting our absolutes. Let's try forex.com for data. They should have a lot more data. No.
How about, Francis, on the absolute price of platinum? Could you give us maybe your best take on like an intermediate term target? Let's talk about like a 12-month target. Where could a rally take us if someone wanted to trade this? How does this look to you?
I did something on the shorter time frames, and I'm going to give you a small little sneak peek on how we trade. We trade utilizing the HVF method, and you are already in an HVF break at the moment. There's already quite a bit of move already happened. So my take is the following. We do this, and I'll give you just a quick run so it doesn't get too technical. we've actually got the first impulse, we've got a second impulse, and we've got a third. And that would have been our trigger long, and that would be our stop placement. So we usually enter early, and there was a nice little squeeze in there as well. So you could have got, let me change color as well. Everything's in red. So we go green. You should have got long or been a buyer here. Again, let's just rub that out, and I'll just do a better job. Sorry, that's a bit granular. So if we just go with a nice tight pen, you get your third and final there. You should have been long. That's your final chance to enter. We call it the just-in-time entry, and you should have a stop here. So that would see you long with that as risk. And you would have been long just north of the 855, and your stop would be just south of the 845, which is about $10. Call it 12 with an extra dollar on either side. Now, the geometry we get from our pattern actually has us going up for 918. Was it 918? I think it was 918.
So we almost got there. Got about 915 or so.
Yeah, but the worrying concern is there's a little bit of a possibility of a double top and a support level here, and you've been getting a bit twitchy and volatile there. So the question is, will that trade survive?
Yep.
What's going here? Because if you were to make that target to the downside, you would break it. You would break what we call our funnel level. That said, so you should have already been in on that, and you should be in the money. But you'd be looking for 918. I've drawn it a little high. 918 is around here. Just didn't meet it. What could happen, which would be nice and bullish for the guys, would be if we had another little wind up. We call it a booster. When part of the way you get another. So that there is a chance this is like this, and we get a third, and then we get another squeeze, and then you get a new target generated by that up.
Right. So we need to see that low hold sort of make a slightly higher low there.
Critical level here.
Yep.
At the 880 mark. Critical level. Do not tolerate a break of 880 if you're already long, because that means, you could be coming all the way down to our funnel levels down at the 850, 845.
Nice.
If it's a long-term investment, then just time your buying further down and hold to what you got. But if you're trading or there's any leverage involved, do not tolerate an 880 break. If we get a nice third, there's an opportunity that you might get some geometry taking you deep into the nines, lower half nines, which would be quite nice.
Excellent. Really good analysis. We got some levels there to watch. Platinum looks very attractive on a lot of these relative valuations. I think in closing, Francis, there's sort of a broad picture question that I want to pose to you. Let's talk about this. The markets, in my opinion, are primarily driven by psychology, not by one or two fundamentals. But what is the overall makeup of the market? What is the market thinking and feeling? What mode is it in? How do investors, when we're living through these irrational times and you have manipulation happening across the board, which I've always said happens, but yet still, as we talked about, it's a fact of life. It's going to be with us. How do investors stay sane? How do investors keep some skin in the game, but not get too caught up in it that when we have these drawdowns, they say, forget about the whole thing and let me move all back into US dollars? What's one or two strategies that people can use sort of almost emotionally or strategy-wise that they can really stay involved in these markets?
Yep. So recognize, I love unraveling the great game that the guys are pulling. So recognize it as a game and see it as a game to solve and a puzzle. And recognize that there's always, keep a degree of fuzzy logic, that there's always time for even the rational arguments not to occur. Think the Tesla short by a Rockefeller bankrolled Elon Musk or whatever the case may be, to keep burning and burning and burning, because if they keep him going, eventually he's going to be 30% of the car market globally, etc. They've introduced him to all the key people in China. Recognize that there's ulterior forces that exist. So always go into a trade knowing you could be wrong, even when you feel utter conviction. leave that door open. I use a phrase, and we got a little series where I talk about it, where I say, always say OBP at the end of everything you say. On balance of probabilities, I have a bias too.
We're never certain about anything in this world.
There's no certainty. You know nothing. The more I've learned how little I can know for sure. And that is a big element of it. So watch your language, because you can't become in your mind that which you aren't speaking. So, and when you're speaking and sharing views with others, if you use empirical language or great conviction, you are dosing your own brain with that drug. You are brainwashing your own brain. No dialogue is monodirectional. I'm hearing what I'm saying to you, and I'm reprogramming it back into myself, as well as passing a message to you. So watch language and recognize that there are abnormal forces in place. Always have a point where you accept that you're wrong. That's why one of the most useful things I said is capital preservation is the game. That's why I gave you guys the 875, just sub the 880. Accept that you're wrong. That's not too far away. You shouldn't go bust with that move unless your sizing is ridiculous. And if your sizing is ridiculous, you should be reducing it now immediately and never doing that again. But that's the key aspect around which I say. Go in knowing that you can always be potentially wrong and trade accordingly to that. And then the other aspect is don't lose the faith. You can trade many times don't trade the smallest time frames, but really big setups that expect some industry to be totally overhauled. Recognize there's these interventionary forces that may not let something happen. So trade the 4-hour and the daily, and keep an eye on the weekly and the monthly for trend. Like we were looking at that falling wedge on platinum against gold, I think it was, from 2009. That's useful, but it doesn't tell me how far it might go. So make sure you have a decent level. Our system is a set and forget system. We know where we're happy to take off, and we do it whilst mentally neutral. Once you've taken a position, you've actually lost neutrality. All your best trades start from a point of square. You never make a great decision on an underlying when you're already in that underlying. Getting square is getting back to neutrality, then reassess. You might switch. You lose the dexterity and the nimbleness to flip. I'm potentially flipping on oil to a bull, because it was also in a bit of a rising wedge structure, like the S&P. But actually with some fundamentals and some thought, sometimes rising wedges, this buying that comes in along the bottom is the advance party of a major surge. It doesn't always break down. There's a 30%. There's a small third that you get a melting up. So always keep that essence open, know where you might be wrong, and retain nimbleness. So capital preservation is the game. Staying in the game will make you a long-run winner. And 3, nimbleness, preparedness to flip views. Flipping views in any other case is like U-turns in policy, like U-turns on the Fed. We're calling him an idiot because he switched. Actually, in trading, it's an attribute and a positive. Do not get married, and always ask the other opinion. That's the value of why we have a community that are showing their charts and their draws. If he thinks it's awesome and he's going to trade it huge, and I say, Del Taco, yep, it might go down, but hang on, you haven't seen this. If I look at this chart, I can tell you that maybe actually this could be a positive setup and that we're going to go up. Think again. He was oversized. He goes and resizes immediately. I've reminded him and opened that window and tested his belief structure. That's why, having an environment, community that you speak to, trading cannot. I wanted to get out of a corporate mind and away from employees and away from people telling me what to do and people needing me to tell them what to do. And I went and traded on my own at home. And guess what? I ended up on my own at home, and it sucked. So actually now I've created my own community of like-minded where I can talk to people about the things that are most interesting to me, and I'm a specialist and they're prepared, and it's mutual alignment. They get benefit from me and we're sharing ideas. I make a lot of great money off my own students and cohorts ideas inside this platform.
That's great.
People need to create an environment where they can do that. And we can talk cryptos, FX. We have a methodology that applies across all things. And a nice and easy to use fulcrum. That's what you want. You're a community leader. I think you should establish for your guys something very, very similar where the guys can share, and always encourage the guy that is contrarian. Because when I first heard someone who said something different to what I say, your knee-jerk emotional response is, I like him less than the guy who said, yes, I agree. Because we're emotive humans. Learn to love the difficult guy. And now I love him. And I actually always applaud the person that comes in, what if? But what if, Mr. Troubleshooter? Because it keeps the doorway open. Our mental framing is always such that we want certainty. We try to create certainty. Adverse, sudden, shocking events undermine us. And the problem with trading is in the mindset, and it came through, come into my trading room. I can't remember the title correctly. Enter my trading room guy. It says people's ability in mentality to deal in an uncertain environment on a probability-based aspect. That is where they fail. Everybody wants the certainty. That's why we actually have FOMO buying, because people want to buy something, but they want to wait till that last minute that the move starts running so that they can say, it's a sure thing now. And then they chase in because they have a fear of loss. So they don't want to engage, and they don't want to lose. So they're treating a little bit snake bite the market. And then suddenly, when it seems like it's looking like it's going to do what they want to do, their fear of missing out now becomes greater than their fear of loss. And that force overwhelms them, and they chase into a pump. And we have a rule, never enter on a market order. Let the trade walk. A great trade. Tilbury, for example, we put in here. Sorry, if I close it, it's in here. I missed the entry. It's continued to do exactly what we expect. It's going to probably make its target, should find it for you in general markets. And I can tell you absolutely, it's frustrating not to be in it, but we have a rule. And I call it, I say, don't be. I don't know if you know when the shops are being looted and there's a ransack moment going down. You have to dispassionately watch this and say, I ain't a looter. Guys are stepping out with free flat screen TVs and all of that. And it's all savages, all go system. And your point of principle as a character is, I don't loot. Maybe those shops deserve to have stuff stolen. Maybe they do have insurance, all the stuff. I'm not a looter. I don't chase in and loot. And then in the same sense, I would say to you, with your trading, you've got to become the guy that says, we don't chase markets.
Say no to FOMO.
And say no to FOMO, and treat it as something that's similar to being, running in behind the other savages that are breaking glass windows and grabbing flat screen TVs or whatever they're looking to steal. That's and I would definitely say that's going to, if you can do that. And what ends up happening then is you end up trading much more on real discipline and real insight. So here was when the idea was first shared by the guy. We get rank and everything, Raymond. And this is the cryptos for the equity markets, cannabis stocks, by the way. And we were joking about it in the beginning. There's the pattern draw. He's done it on quite a big time frame. That's at 240 minutes. You can't see it. But if I just take you into the live charts where we were away from where we were discussing this, and we put it in there, it's done exactly what it should do. And you've got to be prepared to let something run. That means you need to be early, and you need a method to determine that, because your financial mathematics change. So we are short this on that structure. That's the pattern on it. And I did the YouTube, even though I'm not in it, but the guys are in it. Some of the community guys are in it. And I'm okay with that. There'll be some that they miss that I'm in. And we said at 79, this is a sell. As it broke the grind line, it had amazing structure for that, which we look for, and the target is down at 36. So essentially, we're calling a 55% market cap devastation. Wow. And it's done perfectly. It's done everything it should do. Does the second chance, runs the interim, small rally, dipping now. Hey, it could still fail, and guys could be watching this in 3 months' time and say you were wrong. But it's done pretty good. And the key thing is, there's the risk, and here's the reward. Yep. And actually, for what it's already done, I would have said the probabilities, if I close that and actually click on that, it's an 11.37 risk-reward ratio. Is my odds 1 in 11.37 of only being right? And I said, no ways is that. I think there's quite a high probability of it being right. Better than 1 in 37. So you have an asymmetric environment where your trading is maths. So a simple mathematical formula for being successful is trading is, what is the expectation of probability of outcome? I call it a POUT score. What's the probability of outcome? So that's the probability element times by what risk-reward ratio you can conjure. Simple as that. If this is a 1 in 5, but it gives an 11.37 risk-reward, you should take them 5 times in a row. You should take them 11.37 times because one of them will pay. So even if the POUT is low, if the risk reward is higher, you take the trade.
Yep.
And this is financial mathematics. And you keep putting yourself doing one thing particularly well, and this is where you win. And that's where we scrape the ideas, we test them, we check the structure of them, and then we trade them. I mean, we caught Bitcoin for losing 50%. I've caught Gulf Sands Petroleum, a 75% market cap decimation off technical analysis.
Nice.
That ended up... It had holdings in Syria and was in oil when the June 2014 oil collapse started, July oil collapse, and the escalation against Syria started to take foot, something that's still happening today. And it ended up going from over £2 to 3 or 4p.
Yeah, this stuff is very powerful. I just think that it's fascinating. I mean, I'm someone who loves to study these patterns. I do this in my free time. Whether or not I'm trading a particular market or not, I'm looking for patterns. I'm trying to understand what's driving the market. And I think for those who are interested in this sort of thing, it's a discipline that can take a decade to master. And even then, as you said earlier, you still know nothing. You still have to admit when you're wrong. But you know, I think there are certain individuals that are really drawn to studying these patterns, studying how human beings come together, buying and selling and buying and selling, and they move in these waves and these patterns repeat over and over throughout history. I know I just find it fascinating. I always have, and I like to have you on the show, you know, because it's one thing to speak to someone who understands the fundamentals, but then it's another thing to speak to someone who can recognize those fundamentals, but also recognize when the market is going to move contrary to those fundamentals. You know, the fundamentals are not enough, is what I always say. We need to blend the fundamentals with the technicals and come to an overall assessment on what is happening in the markets. So this is why I love to speak to you, Francis, and thank you for coming on the show. This has been a great interview, and I just want to offer you the chance to let people know about your services. How do they find out more about you if they would like to follow up with you?
Absolutely. That's very kind. It's quite simple. It's not cheap. And we have a high quality community of really good disciplined guys that own their own outcomes. Because at the end of the day, trading is not, I can help with method. I can even help with mindset, but people at the end of the day have got to bring their own patience and their own ability to learn. This is the Market Sniper. If you click to get started on the button here, there's an opportunity to chat to someone who's where they were 2 years ago, if they're interested in it, who is an HVF trader himself, came as a student, made the investment for himself, and will go through the options for you and tell you about it. We're not a hard sell organization. We're a community of the willing. So it's a case of, you know, that's the deal. That's an offer. If it works for you, it's good. If it doesn't, we have a self-study product as well. That's at a lower point, but you're not part of the community. And some of the things I've shown, you can just watch videos and get up to speed with that. We include you in non-farm events and crypto Fridays as well. But the URL is, as you see up top there, for the guys if they want to visit, and all options. And there's a bit more information in the videos as well. And as I say, I genuinely am passionate about trading. I'm passionate about liberty for human beings and pushing back the overreach of aggressive fascist states that want to take control of your every existence and life and wish to seek to criminalize you so that they can own you and extract from you and keep you on a treadmill. We are lifestyle traders. I've got 3 screens in total here, but the one's largely off. It's a Mac. I don't sit with 9 screens 14 hours a day. It's not good for your health. It's not good for your family. It's not good for your fitness. You've got to get out there and enjoy life. You've got to have a set and forget system so that you can be away. You've got to, you sound like you've got a, what kind of dog do you have, by the way? He had a big old barrel chest sounding.
Yeah, he's a German Shepherd.
Yeah, he sounds awesome. You've
He's
got
a
to
good
be
boy.
out with your German Shepherd, running in, taking him for a walk on the mountain bike while you do some hills, if that's what your bag is,
That's
and
exactly
keeping
right.
fit. You got to be around. So trading can be a pursuit that it can't consume your existence. It's got to fit into your existence, yet it can be exceedingly profitable, but it's also a hockey stick return. You go through a desert sometimes, even with good method, but you don't come out the same person. It's the best personal development program I could suggest to anyone. I can see in you already that you've taken yourself quite far down that personal development growth curve just by being active in precious metals and by running a business. And it's the kind of thing that another entrepreneur will know what it's like, and also other people that have become successful in trading. There's a maturity about them. There's a difference. Everything improves. People's golf swing improve when they get their mindset right in trading. You keep their relationships with their wives improve, all sorts of things, because it truly is a humbling, but at the same time, very, very gracious teacher that can reward you very, very well. But you can't ever lose your head. And what happens is you become more level, more consistent, and you yourself, your own volatility, that's the irony of me trading a volatility system, is your own personal volatility reduces immensely. And you become good day or bad day, far more general, calm, and in the moment. And I can't suggest it enough. I wouldn't change the course of life I've taken for all the tea in China. I have plenty of time to watch what the control structure system and game is up to help try keep people out of being trapped. I want liberty for people, financial freedom. I want them to get off the treadmill that the system is trying to keep them running on, so that they continue to be extracted on and serve a psychotic, overreaching master that has very little realms or justification for existence and is seeking to get into further aspects of our lives. And if you're that kind of person and you want your freedom and you may be up for us, and it costs nothing to talk to anybody. So, I mean, sorry, I ended up talking for quite a bit, but it just, when I start speaking about this, it just
no
runs.
worries.
So you're welcome to have a chat, and there's absolutely no obligation, and just book a call. But thank you for also being consistent. Thank you for being out there and keeping the precious metals message out. I do believe it's a fake market. I do believe if they suddenly do a lockstep introduction of the SDR, metals will be hyper valued. They could go to $100,000 overnight. They could pump to $5,000, $6,000, $7,000, $8,000. There could be a ice 9 freeze moment where you can't draw much out of banks. There will be all the circuses and saving the world hype and blarney before they implement the plan that they already know they're going to implement, and they'll do a revaluation of precious metals at a new realm high. And then the likes of the East, where the gold has been moving, everyone who holds will do great. But don't talk about it and keep it off grid with your hodls of metals. Definitely.
Francis Hunt, excellent to have you on the show once again. I really appreciate the differences that we have and also the similarities that we have. I'd like to have you back on again, maybe later on this year, so we can touch base and recheck on some of these ideas and see how things are looking, if that sounds good with you.
Love to do it again, Chris. And thank you to your audience for watching. Hope they enjoyed it. A bit of relative market assessment, a whole bunch of things we did today. Hope it was interesting. And God bless you all. And safe journey forward. And keep being a libertarian like you are and helping those that seek it.
Thank you again. And thank you, everyone, for watching. We will be back next week with the regular scheduled broadcast. Thank you.